Well, let's turn to international markets, and for a view on the US outlook into next year, Lachlan Hughes joining us from Swell Asset Management on the beautiful Gold Coast. Lachlan, great to go and see you there. When I saw your name pop up this morning, I was so happy because I want to ask you what is going on with Apple at the moment, because its shares, no matter what is going on in the marketplace, is just continuing to grind higher. What is behind it?
I think the expectation for Apple is obviously a strong cycle with the latest iPhone, so I think that's part of it. But I think people are looking ahead at the services business and seeing the opportunity in front of them. And also, and it's been talked about for a long time, potentially the Apple Car and their augmented reality glasses. So I think it really is just expectation. The earnings earnings are moving up, but the expectation around the business is increasing, and that's what's driving it at the moment.
So in terms of the market more broadly, Lachlan, we've seen two sides of the roller coaster where it seemed like it was sell everything. Now it seems to be buy everything. But under all that, not much has really changed in terms of underlying factors.
Yeah, that's right. And I think that looking into 2022, I think the first thing is to look back at 2021. And 2021 was an extraordinary year. And why is that? Well, the benchmark MSCI rallied 30%, and effectively that's 3 years of return rolled into one. And the thing that was driving that was earnings growth. So the benchmark earnings growth over the last 12 months was 79%. It goes from 79% in the last 12 months to 6% next year. So you're going to see a very sharp deceleration in the earnings growth. And in 2022, central banks will be running their own race. You contrast this to 2021, when you had coordinated policy response by all central banks. Monetary policy accommodative, fiscal policy accommodative. And why? Central banks are basically, like what you alluded to, Annette, is they're calibrating to specific circumstances. Different speed of recovery in different markets, different stage of pandemic, different stage of vaccination rates, different inflation pressures, different level of debt. So I think what you're going to see next year is markets behaving quite differently. It was very coordinated and markets rose together this year, but I think next year it's going to be driven by specific factors.
Do you expect we're going to consolidate after the gains we've seen, or we'll actually get some more volatility like we've seen in recent weeks?
I think 2022 is going to be a stock pickers market. So I think in terms of the benchmark, I think 6% earnings growth next year. And, with inflation pressures in the cost base, some of the lower quality businesses won't be able to raise their prices with inflation. So I think broadly the market it'll be a tougher year for the MSCI next year. And I think it really is going to come back to good old fashioned stock picking. And so what companies do you want to be in? You want to be in the high quality names that can raise their prices with inflation. And as your slide here says, it's Facebook, it's Amazon, it's Apple, it's Netflix. It's companies that are delivering more value to the consumer, where the consumer's happy to pay a little bit more because they are receiving more value than what they're paying for.
So in terms of one extra one, we need to, just to clarify, there's crashes, there's corrections, and there's normalizations. Which weight do you put on those three words heading into 2022?
I think 2022 will be normalization. So I think I expect the benchmark to grind higher over the year, but really after the 2021 they've just had, I think if they can consolidate slightly up, that would be a result. But yeah, it really just depends on the companies. And I think the sectors that have performed in 2021, and oil and gas is a good example. I think oil and gas stocks will have a tougher year next year.